FOMC finally made a positive pivot today to further slow the sell-off of the Fed's balance sheet. And this marks another step towards ending quantitative tightening and restarting quantitative easing, which is in effect using the money printer to create new money and support all assets, especially coming from top down from the treasuries. And this is ever so important for the markets, especially crypto. It's not up-only season yet, as many people are claiming on Twitter, since we are still quite a few months off before QE actually starts. And that's if QE can be started again. That's why today I want to summarize all of the important announcements coming from the Fed in the March FOMC meeting, talking about the rate cuts projections, QT and QE projections, when will that actually make the full pivot, and how it affects when the crypto bull run can resume. I'll also give you some action points on how I'm consolidating my portfolio using this bounce. But TLDR, I don't think this is the start of the full-blown bull run just yet. So make sure to watch till the end for my current strategies. Okay, if you're new here to the channel, welcome. My name is Dennis. I'm a crypto angel investor for the past 6 years, and I have invested in over 100 crypto startups. On this channel, I share views on market trends and investing strategy to build wealth in crypto. As you scroll on the timeline today, here's what you're going to see. So I made a post on Twitter just now. This is a positive Fed balance sheet pivot. You go ahead and read this, but we have been tracking this since last May, since May 2024. And very important here is that although this is a good move to slow the runoff of the Fed's balance sheet from 25 billion per month to 5 billion per month, this is not a one-time pivot that completely changes the whole landscape, because last May, during another FOMC meeting that is very similar to the one we just had today, the Fed made a similar announcement where they announced that they were also slowing this, the runoff of the Fed's balance sheet from 60 billion per month to 25 billion per month. And I can show you that right now. So how you can track these FOMC events is directly on the FOMC website. This is all public knowledge, and you can go ahead and find, for example, today's statement right here, March 19th, and you go to the statements, go to the whichever version, HTML, and you see down here, this is the section that matters. The committee will continue reducing its holdings of treasury securities and agency debt and agency mortgage-backed securities. This is, in layman's terms, they will continue selling the assets on their balance sheet. They will not reinvest their earnings. That's how they typically manage their balance sheet. However, beginning in April, the committee will slow the pace of decline of its securities holdings by reducing the monthly redemption cap. This is how much that they will let the balance sheet run off. So it used to be that they can let the balance sheet reduce up to $25 billion per month. But starting from April, they can only have it reduced by $5 billion per month. So they can only have $5 billion of sell-off per month. Now, big misnomer here. Number one, this doesn't mean that QT has stopped. What is QT? QT is quantitative tightening. It's this whole effect. So as long as the Fed can be reducing their holdings of treasury securities, this means that the balance sheet will continue to drop. It is dropping more slowly starting from April, but it is still dropping. So QT has not ended. This is number one. Number two, it begins in April, right? So it usually takes one more FOMC meeting to skip, and they will say by the next meeting, this action has started to be carried out. And on top of that, this is not the first time this has happened. So a lot of people say, if you read on the timeline today on the people's takes of this event, because just this year, people have started to follow the Fed's balance sheet decisions. A lot of people are saying now that they made this slowing of sell-off, this means QT is going to start immediately. No, this is not the case. I have done this full research before because I really wanted to understand how the Fed typically acts, how long it takes them to act. going from a slowing of the sell-off to completely stopping. And there is no clear indication. So take a look at this. Similar to this release today, March 19th, 2025, if you go back to May 2024, this is an event that I've covered last year, and you look at this statement, there's the exact same statement here. So you see they have continued to reduce the size of their balance sheet, but beginning in June 2024, the committee will slow the pace of decline of its security holdings by reducing the monthly redemption cap on treasury securities from 60 billion to 25 billion. So even back in last year, 10 months ago, they have made a similar pivot to say that we're going to slow down how much we're selling per month. And when I saw this in May of last year, I quickly, dove into it, head deep, and I wanted to find out, okay, does this mean QT was going to end right away? And my conclusion there was summarized in this video. I think it was this one. So in here, I have looked at all previous statements coming from the FOMC and by which month of the FOMC that they stated they were going to slow the sell-off of the balance sheet. And then after that, how many months did it take for QT to completely stop and QE to begin? And my conclusion was that the shortest time frame was 3 months and the longest delay was 8 months. So that gave me, looking at it today, a bit of false hope, because I put really 8 months as the timeline. And you even see how I've positioned this video here, where I was really expecting that the Fed to have made the full pivot to stop QT by January 30th, the last FOMC meeting, because that was 8 months past from May last year. But they didn't. They didn't do that. And I was caught off guard by this as well. So even this time, when they made yet another adjustment to the Fed's balance sheet policy, it still is not a full stop to their policy to stop QT. It's still another slowdown of the event. So this just goes to show you that the Fed acts whenever they want, however they want. It's completely up to them. So it's really quite dangerous to look at this and just assume, okay, April we're going to slow and May we're going to stop. You cannot have that guarantee. So that's a big myth that I want to warn people. The Fed really acts on conditions and how they see best benefits their goals, which is inflation and unemployment. And so far, what are they seeing, right? So if you look at some of the actual constraints and pressures coming up for the US financial markets liquidity, they are kind of squeezing the treasury quite dry right now. And the Fed has acknowledged this today, according to Jerome Powell's Q&A section. So let's take a look at this. Here are some of the key summaries. What did the Fed Chair Jerome Powell say today, organized by topics? And here is what he said about rates, rate cuts. We're not in any hurry to move on current rates, and they can choose to cut or they can keep a relatively restrictive stance, and they're going to basically go meeting by meeting. And this does reflect on the market's perception, which is going into this meeting, most analysts predicted that the rates were not going to be cut again. And indeed, they didn't cut today. And according to the dot plots, which is the projections that the FOMC's analysts say what they should target for the interest rates, well, those are the same targets that we have had from December last year versus today's meeting. They're all the same. So here you can look at, this is directly from the Fed's website, December 18th dot plot. The number that matters is right here. So end of 2025 the projection for interest rates for the Fed funds rate is just above 3.75%, between 3.75 to 4. And today, the same dot plots came out, and you see end of 2025 projections between 3.75 and 4. So the exact same. And the exact number is about 3.9. I believe they even have it the exact same, according to what I have read from right here. So March FOMC dot plot prior was 3.875, today 3.875. So this is all you need to know about interest rate projections and cuts, which is it's the exact same from last quarter. There has been no cuts today as expected. By year end, the target is still 3.875% as the same target of projections from December 2024. And we could have between 2 to 3 cuts this year. The difference there is not much. People are quite split. And if we have 2 cuts, slightly bearish. If we have 3 cuts, slightly bullish. But really not much to worry about in terms of rate cuts. So that means all the points need to be focused on balance sheet and what the Fed actually acknowledges in terms of pressures that the US economy and the US financial market are facing. So on the side of balance sheet we have just covered, even though Jerome Powell and the FOMC have slowed down the runoff of the balance sheet, it has not officially ended QT. And they have said that it's a time and it's a good time to be slowing the balance sheet shrinkage. However, they plan to stop the balance sheet shrinkage, or in other words, stop QT above the level that is ample, but we are still far from that level and will approach it more slowly. So it doesn't mean we slow down in April and we'll end in May. They have said that by mid-2025, they plan to stop. This is according to official meeting minutes from January, but there's no official dates yet. Probably a couple more months, but I don't think it will be very long post this after this slowdown, because we are already at the 5 billion per month, basically the minimum. And very important here, they are recognizing that the flows in and out of the Treasury General Account or the TGA account at the US Treasury got us thinking about the balance sheet reductions. So what's happening here? The Fed does recognize that the US financial system needs a lot of liquidity right now, which is very similar to the global liquidity concept that many people follow. So in my last video, I have covered how long exactly we need to wait before QT can stop and QE can start. And most of these are actual financial system factors. So take a look at this. This is my last video from 9 days ago, last live stream. And basically, the US financial system needs a lot of liquidity, and most of the facilities are drying up. So number one, the reverse repo facility you see here mostly have dried up over the past 2 years. And you have the Treasury General Account only sitting at $550 billion and it's actively being drained. This is the Treasury's checking account, basically cash that they can still draw against. And this is very tiny compared to the debt ceiling problem that needs to be resolved quite soon, because the US is meeting its debt ceiling, and nearly $3 trillion of US debt that will be meeting maturity this year and will need to be refinanced. So all of these will require extra liquidity. And basically, once the TGA dries up, there is no more liquidity in the system. And if the Fed doesn't act in some way, both the Treasury and the regional banks could be coming in under pressure. And this is according to research that's done by Cross-Border Capital, the Michael Howell, one of the forefront researchers of global liquidity, the concept itself. So you can go ahead and watch this video if you want a more deep dive on that insight. So TLDR here is that we cannot be looking at today's event as a for sure timing that April QT stops and right away April QT slows and May QT stops and QE starts right after that. This is not the case. We know that by mid-June, July, mid-2025-ish, the Fed recognizes that they need to do something. And at the same time, the liquidity constraints are actually so tight by that point that if they don't do anything, the system could potentially break. And that's why we see a lot of signs of high probabilities of recession, according to macro analysts. However, the Fed also has pinned themselves right now. According to Powell, the Fed chair, he has stated before that they will not use QE until interest rates are back at 0%. Now, this is a catch-22 that the Fed has put themselves into right now because we have seen the dot plots, we have seen the projections, and currently the Fed fund rate for interest rates is targeting 3.8% by the end of the year. And the long run target is 3% by 2028. So he says they can't do QE until this rate is at 0. So there is no possible way that we can get to 0% naturally and just by this gradual, slowdown. So that's why there is not only a, time delay of how people perceive this slowdown of QT and trying to front run it. That's very dangerous. But also the full shift from QT to QE is still a big question. And basically the Fed has not acknowledged this. The Fed themselves have said this today, which is quite worrying, honestly, which is that they held rates and they have stated that year-end GDP forecasts are lowered from 2.1 to 1.7%. And unemployment rate targets have been raised from 4.3 to 4.4% by the end of the year. As well as core PCE inflation forecasts have also been raised from 2.5 to 2.8. So the Fed also acknowledges that, yes, the economy and the financial system are both under pressure right now, but they do not want to lower rates and right away. And before rates are at 0, they will not use QE. So this means we either do what the Fed is saying on paper, which is, we're going to have this stalemate for the next 5 years, which is highly unlikely, or they are still waiting for something to potentially break before making this retractment of their statement and making an emergency cut or whatever it may be, stealth QE, whatever the stance may be. But QE from the current definition as it stands cannot be carried out that easily. So that's another big worry that people need to have on their mind. It's not going to be smooth sailing just because the Fed has decided that they're going to slow the sell-off of their balance sheet and potentially stop it by the middle of the year. But that's all they can do. The timing is looking like this year liquidity needs to come. But the form that it comes is not going to be smooth like this. It's not that the Fed slows, stops, and then starts buying. No, they cannot start buying anymore until something breaks. So this is really the worrying part that could really get a lot of people trapped if you read this announcement wrong. The timing is there. We're looking at 3-6 months down the line before something meaningful of liquidity can come. But how it comes is going to be quite violent. And that's why it's really important to be patient on this if you don't understand how this works and if you haven't read into all the material and all of the statements that the Fed has been putting out. So that's my warning for people. it's not that, the timing is bad. Timing is good. We're not that far away anymore, but this last phase is especially violent. Okay, so I don't want to drag that on too much, and we have covered what Powell and the Fed has said today. So, okay, let me show you why this even matters, why QT and QE matters, and how do you actually track it. So, if you want a deeper dive on this, you can, again, check my original video from back here. Altcoin season starts here when money printing starts. And I have shown the exact same charts that I'll show you just in a bit of the correlation between the global net liquidity index to the Federal Reserve's balance sheet to Bitcoin dominance and Ethereum to BTC ratio performance. So I'll just show you that right now and how you can track it yourself. And where's my trading view chart? Let me bring that up. Okay. Here. So on TradingView, you want to look at a few things. So there are two metrics that are very important. Number one, the US Federal Reserve's balance sheet is very simple. This is public data that's released every week. And the ticker is WALCL. You can track that right now. And you see this has been declining since April 2022 and still is declining. And very quick, important part I want to show you here is, remember how after the May 2024 pivot, when the Fed has slowed down the runoff of the Federal Reserve's balance sheet, look at how little of an impact that looks like. Basically, from May until now, there is just a slight difference in the slope of this runoff. If you can even spot that, right? That's all the change there is. So this is not enough. In order for this signal to fully trigger, from April on, this slope is going to further reduce, but it's still going to reduce. It's going to look something like this. And in order for this signal to fully trigger, this is not enough. What we need to actually see is a full scale pivot from the balance sheet going down to it going back up again. And why does this matter? Very simple. You can compare this metric to 3 other crypto indicators that all point to the same thing. Number one, Bitcoin dominance. So you look at Bitcoin dominance, look at the last 2 bull markets. I have them circled out right here. And you can compare that with Federal Reserve balance sheet. And you see when the Fed made pivot, this was the bear market for altcoins. And when the Fed made pivot back here, this was the bull run for altcoins from August 2019 to April 2022. And a bit similar back here as well. When the Fed balance sheet made the pivot to go from neutral to reduction, that was the end of the altcoin bull market and led to the rise of Bitcoin dominance in the altcoin bear market from 2018 to 2019. This is on Bitcoin dominance, and you can clearly track this on ETH BTC as well. Very similar and even better fitting. So here you have Fed's balance sheet, you have ETH BTC chart, and you see the two basically bottomed together, topped together. And back here, you could say that they topped around the same time together, right here. So this is Federal Reserve balance sheet, and you can also track this against other altcoins. So the best indicator formula that I like to use is something like this, where you have the total 2 market cap minus USDT market cap divided by BTC market cap. Essentially, this is how all other altcoins are doing, including ETH, but excluding USDT versus Bitcoin. So how altcoins are doing versus Bitcoin. And you see, similar, they have bottomed here, topped here together, roughly, and also topped here roughly. Now back here, a lot of people say, oh, from 2014 to 2017, we didn't even have QE. Yes, I agree with you, but you have to know the full macroeconomic backdrop of QT and QE in the first place, which is that they only started after the financial crisis. So you can't compare the current paradigm to the previous. There are other liquidity conditions that drove markets, but since we have such strong QT and QE now, it matters when it matters. This is the way to think about it. If you think about previously, oh, we didn't have QT and QE and thus this doesn't matter, that's not going to serve you well, because we have to compare the paradigm with QT and QE being dominant to itself instead of versus where other liquidities are driving the markets. Okay, so this is why it matters. Now, this is one way to track it. Another important concept that you also often hear of is global liquidity. What is global liquidity? It seems very vague. You know, a lot of people say that it's the M2 global money supply, and you should be able to, you can do, you can track the M2 money stock right on TradingView, and people will say, oh, look at M2 global money supply, right? It's always going up like this. So that's why markets must go up. This is not the case. Okay, this comes from a inherent misunderstanding of what global liquidity is. So global liquidity, as we understand it, that works in terms of asset markets, is heavily driven by central bank liquidity and central bank balance sheet, not by the money supply itself. So the real global liquidity that I have found to be quite accurate is this indicator right here. So let me go back to, let's do the ETH BTC chart. And this one, Global Liquidity Index. And this is the one that I have used in my previous video going over these signals as well. So you can find this as a free indicator directly on TradingView. Just type in Global Liquidity Index. And I believe it's this, most liked one, 6.1K. This is very accurate. And you see, very similar tops, bottoms, right? Tops right here to the altcoin market, to ETH BTC ratio, bottoms right around here, tops right around here. Now, what is contributing to this global liquidity index? Well, you can go into the settings and you see very clearly here. It comes from the Federal Reserve System, which is Fed balance sheet, among other things, the Treasury General Account, the TGA we have mentioned, the reverse repo account, which we have also mentioned that has been draining, and the ECB central bank balance sheet, the PBOC's central bank balance sheet, and BOJ, Bank of Japan central bank balance sheet, and other central banks, albeit a lot smaller. But what's very interesting is that by default, you should not include the money stock, because the money stock is way too big and always expanding because the money printer is always on, and that will actually dilute the signal. So you don't want to include M2. Instead, you want to focus on central bank liquidity and US Treasury liquidity, such as the Treasury General Account and the reverse repo facility. I have, again, gone into all of these in my last live stream last week. So this is basically what global liquidity is. Simplest indicators to track is this one. And you see global liquidity is dropping as ETH BTC is dropping. What do we need to see in order for ETH BTC to turn around, Bitcoin dominance to turn back down, and altcoin versus Bitcoin ratio to turn up? Very simple. You need this global liquidity index to be printing in higher highs and higher lows, to be starting a new uptrend durably. And what does that look like? Well, right now you see lower highs and lower lows. So we are nearing trendline resistance, albeit that's usually a meme. What we need to see is for it to, in some way, create a higher low and then a higher high. When can that happen? Well, you can actively track this. But what I like to do, what I have found to be quite useful for my own tracking is comparing global liquidity to the Fed's balance sheet. And you note that each time that the global liquidity index shifts is when the Fed really makes the full pivot between going from QT to QE. So just stopping QT really might not have the full effect until the Fed's balance sheet can actually increase in a meaningful fashion again. So you see, global liquidity did not rise across the entire world until the Fed's balance sheet started to rise very dramatically. And same thing back in 2022, global liquidity basically started its downtrend when the Fed made the pivot from QE to QT. So this time around, I think it's going to match up quite easily until this Fed's balance sheet actually makes a sharp bounce like this. We're not going to have the global liquidity index actually make uptrends until it's most likely just going to slow down, but still look something like this. and that's not enough. So that's how you can track it. Two ways. You can track the Fed's balance sheet or you can track the global liquidity, but do not track M2 money supply. That is not meaningful because it always goes up. Either way, both of these indicators will go up together because it's heavily driven by the US Federal Reserve's actions. It's both a signal and just how much liquidity comes from the US is massive. Look at these real numbers on the scale here. So the global liquidity index currently sits at 29.6 trillion, while the US Federal Reserve's balance sheet already sits at 6.7 trillion. And look at the COVID injection of liquidity, where the global liquidity has increased by 11 trillion from 23 to 35. And the US Fed's balance sheet increased from 3.75 trillion to 8.9 trillion. So out of the $10 trillion of liquidity that has been injected through COVID, 5 trillion of that globally, half of that came from the US Federal Reserve. So this is why the US Fed is so powerful. And it's really the key here. Until the US Fed makes a pivot, nobody else can pivot. And that's why you track global liquidity, you track the Fed's balance sheet, you track what the Fed says they're going to do on their balance sheet. It's all the same. In the end, it all comes down to the same signal. Okay, so this is why it matters. Until this fully turns around, it's not going to be up-only season. Yes, we will have short-term bounces, but that's how the market perceives these announcements, not how the liquidity is actually moving at the moment, because we're not there yet. Okay, so let me finish off with my actions. What do I plan to do today according to this new update from the Fed? So I want to really let you consider the divide between what you hear people talk about on crypto Twitter versus the broader financial world that actually make their capital decisions, investment decisions based on liquidity. So the perception on crypto Twitter over the past few months is that QT, QE is all that drives markets, which is true historically. But usually what that leads to on crypto Twitter is that people don't read much and they don't understand things much. They don't bother. So anytime they see an event that's positive like this, where the Fed is slowing down QT, they will immediately jump to say, this is it, up only. When I made my kind of neutral stance today, and I even clarified earlier that this is not up only right away, people have been commenting that you're wrong. Like, this is it, up only. And you ask them why, they can't point you to all the pointers at all because they don't do the research. So the perception to this event immediately in today's market moves and probably for this next week is that it's going to be positive. We are already seeing Bitcoin having a pretty meaningful bounce here, going to 85. This is nice to see, right? But again, we're looking at like 4-hour time frame when considering a macro indicator that lasts for multiple years. Think about how ridiculous that is. And same thing for Bitcoin dominance, right? It's dropping, ETH is bouncing, but this is the perception of what crypto Twitter hears about and wants to do immediately. But this does not mean the actual long-term risk on assets buyers are stepping in here. They don't care about whether, speculators in crypto are excited about the FOMC speech. They will keep waiting until the real liquidity conditions improve. And that can only happen when both the, where's my chart? That can only happen when the Federal Reserve's liquidity actually turns around and global liquidity index turns around. So there is a lot of risk to rush into call this the new bull run. I think it's much better to, first of all, understand that QT is only going down more slowly, but it still takes time. And QE won't come easily this time. So you need to even track this much more closely. The Fed it's unlikely to make an announcement to say, we're going to start QE and print money. Highly unlikely. They're going to do something very stealthy that you might not see unless you are paying close attention. I'll try to catch it, but I don't know for sure. So you need to be tracking global liquidity index yourself right here. And even when QT ends in the summer and QE ends after all this shenanigans is over, large altcoins will run first, starting with Ethereum, Solana, large caps, then slowly trickle down to the others. So it's actually very dangerous to be immediately taking this macro signal that only fires every 2 to 3 years and then aping into low cap altcoins. That's completely ridiculous. Don't do that. I think it's much more safe to do the opposite and really take this time to consolidate your portfolio. That's what I'm trying to do, is to consolidate my portfolio. Looking at my portfolio right now, okay, my tracker that I have public, seeing which altcoins in each sector that have had drawdowns but bouncing up a bit and are matching the similar levels of drawdowns of larger altcoins that I know can actually survive this year's market volatility. This kind of a consolidation strategy, I think it's much safer, much more meaningful of an action to do than to buy anything at all. So if you have a low cap that's down 60%, and then you have a large cap that's down 60% in the same category, AI, gaming, layer one, whatever, and you want to hold the large cap better, you have held the large cap better, this is a great time to be making those rotations. So consolidation, that's what I want to do today, probably over today, tomorrow. I'll try to make updates on my Twitter for my actual portfolio actions. So make sure to follow me on Twitter at VirtualBacon0x if you want the exact, portfolio breakdown, but I'm not going to be adding any new coins in my portfolio. This is a terrible time to be doing so. Let's see. And one last thing I want you to consider is that even if you believe the time is coming, the good times are coming, which I do believe is true. And let's say we have another 6 months of this liquidity shenanigans before the Fed does some form of stealth QE. That might come when something completely breaks, even just for a couple weeks. And if that happens, can your mid to low cap altcoins even survive? I'm talking about a serious, black swan type of event for credit for US financial system, like a signature bank, SVB bank, something around, there's this concept that happened in 2019 that triggered the last pivot, which was around the overnight repo rates. I'm not sure. It's called the 2019 overnight repo crisis, I believe. Something like that is needed in order for the Fed to actually do this stealth QE pivot. When they do so, can your low caps even still survive? Is it still worth holding? Because chances are they could go down another 90%. But if you have a meaningfully, long-term large cap altcoin, you know that it can survive. If it has survived, for example, the FTX collapse, Luna collapse, SVB, it has survived 2021 and 2022, it can probably survive another time around. So that's another major consideration that I have right now is coins will bounce, the markets will come, but it might not be the same basket of low caps that we have today, even 6 months down the line. So I really want to take this time and consider which coins are actually quality in the top sectors that I have: AI, gaming, layer 1, memes, RWA, the same 5 that I have always had. Try to focus on quality coins, just 1 to 2 coins in each sector that I know have survived at least one bear market before and will likely survive whatever's coming in the next 6 months. And I think that's that actually is like responsible portfolio management right now. It's a bad time to sell. It is a bad time to sell to convert altcoins into stablecoins. That's not the time to do so right now. However, it's also quite risky right now to be taking on full risk, to be taking on low cap risk. So that's why I think you got to really go from the top down. Bitcoin's good, always. Ethereum, Solana, you can put in whatever, like top 10, top 20s, those are fine. But anything beyond like top 100, I don't know how I feel about them anymore. So that's my basis of how I want to take my portfolio in this week to take advantage of this small bounce that we have while the market is reading this FOMC news super bullish. I'm going to look to consolidate my portfolio into something that can actually survive the storm that's coming 3 to 6 months down the line. So thank you guys for joining the live stream. If you want to follow my full portfolio strategy, consolidation, whatever you have, you should go and follow me on Twitter at VirtualBacon0x. I'm going to be dropping probably a big list of coins that I'm moving in and out of the portfolio. And I'm not going to be adding new coins, just going to be consolidating, taking this time, taking advantage of this bounce. And yeah, if you like this content, subscribe to the channel, share it with a friend, like this video, and look out for a general piece about Bitcoin and my stance on Bitcoin going into this cycle. I'm still in the preparation of that. So look out for that video on how the Bitcoin cycle is doing. And I also plan to do one once the actual altcoin season starts. I don't think it's now yet, but when the time is right, I'll make sure to update you guys. So subscribe to the channel, and yeah, I'll see you on the next video and the next live stream.